Hello, welcome to the European Open briefing for Thursday, August the 31st. I'm Rafi Bajan, currency analyst at xm.com, and we're going to be taking a look at what's happening in the currency markets today. So we're seeing a continuation of the dollar rebound this morning, as well as an continued improvement in risk appetite. Despite that, though, gold is being supported by ongoing tensions over North Korea. Gold found strong support at the 1,300 level. The euro, although it is being pushed lower by the stronger dollar, there is also some caution ahead of the ECB policy meeting next week. It did slip below the 1.19 level. The pound is fairly steady around 1.29. Despite the latest round of the Brexit talks not quite going so well. And in commodity currencies, the Aussie, Kiwi, and the Loonie, all of them appear to be struggling against the resurgent US dollar. And we can see in the chart that the dollar index and dollar yen pair are fairly well synchronized. Dollar yen did reach a 2-week high of 110.61. The dollar index reached 93.07. We had very strong data out of the US yesterday, which gave that big lift to the greenback. The second quarter GDP estimates were revised up from 2.6% to 3% annualized rate. Expectations were for only a modest upward revision to 2.7%. The ADP National Employment Report was also released yesterday. That showed the biggest increase in private sector jobs in 5 months, coming in at 237,000, well above expectations of 183,000. And this could possibly be seen as an indication that tomorrow's non-farm payrolls report will be strong as well. And later today, though, before that NFP data tomorrow, we do have the personal consumption and spending figures as well as the PCE price index. That's the Fed's preferred measure of inflation. And all of this has boosted equities, but weighing on safe havens. We can see gold here in the chart, currently just touching that exponential moving average at 1,306. It did reverse higher after coming close to breaching the 1,300 level. Yesterday, President Trump said that talking is not the answer concerning North Korea. But the U.S. Defense Secretary Jim Mattis appeared to tone down Trump's comments, saying that we are never out of diplomatic solutions. So there's still some risk off relating to the Korean Peninsula, but for now the markets are focusing on the strong data. We also had strong numbers out of China this morning. The official manufacturing PMI came in above expectations. It rose to 51.7 from 51.4 versus expectations of drop to 51.3. Looking in the details of the PMI, it was fairly positive, with output, new orders, and business expectations all accelerating in August, and input prices also accelerating as well. And there had been some doubts that third quarter growth could be impacted by tighter regulation on lending, as well as an easing of the construction boom. But that doesn't appear to be impacting the manufacturing sector. But the non-manufacturing sector has eased somewhat in August. The index, the PMI, dropped from 54.5 to 53.4, although that is well above the 50 neutral level. Moving on to European currencies now, we can see that the euro has been steadily drifting lower after touching that 2.5-year high of just about 1.2069. The pound is fairly steady around 1.29. We have the ECB policy meeting next Thursday, and some investors are wary that the ECB may use that meeting to talk down the currency, given the euro's strong rally in recent weeks. Later today, we have the flash CPI data for the Eurozone. And regarding the pound, we did have fairly hawkish comments by Michael Saunders. He has been voting for a rate hike in the past few meetings, but the pound actually fell from his comments for some reason. Michael Saunders did say that the Bank of England is not indifferent to sterling's fall, and that, well, not in so many words, but what he was trying to say in his speech, that although Brexit means that only moderate increases would be required in interest rates, it also does not mean that very low rates are warranted despite the Brexit uncertainty. So he's very much in support of rates going up modestly over the next few months, but I guess the markets already knew that, so perhaps it wasn't too much of a surprise. That's why the pound fell, and one of the reasons why the pound slightly weakened this morning could be because the latest round of the Brexit talks aren't going so well. The UK is refusing to give in to EU demands to settle the divorce terms first, such as the UK paying lump sum to the EU, as well as sorting out issues over the Northern Ireland border and EU citizens' rights. So we'll hear later today when there's going to be a press conference on what has been agreed between the two sides. Moving on to commodity-linked currencies, we can see the Aussie, the Kiwi, and the Loonie are all weaker this morning. The Aussie is down despite stronger than expected capital expenditure figures for the second quarter in Australia. Business spending rose by 0.8% versus expectations of 0.3%, and there was also a strong upward revision to the prior quarter to 0.9%. And this suggests that second quarter growth should come in strong. They are out next week. We're also going to have an RBA meeting next week, but the Aussie appears to have given to the stronger dollar. Is currently trading around 0.7894. The Kiwi is under even more pressure. As yesterday we had comments by RBNZ Governor Graham Wheeler, who once again said that the RBNZ does not favor a strong currency. The Kiwi has a 3-month low of 0.7142, and the Loonie has fallen to 2-week low, dollar Loonie climbing to 1.2662. We are seeing oil prices coming under continued pressure from the tropical storm Harvey. US crude WTI fell to 5-week lows. It's currently trading just below the $46 level. We did have the EIA inventory numbers yesterday, and they did show a big drop in US crude stocks, but the markets are more concerned at the moment about the drop in demand as a result of the shutdown of almost a quarter of US refineries, which is heavily weighing on prices. It is going to be a very busy day for economic data. We already had quite a number of data. We also had German retail sales. They came in much worse than expected, although the unemployment rate in Germany was steady at 5.7%. Shortly, we're going to have flash Eurozone PMIs, followed by US personal consumption income and the PCE price index. We're also going to have Canadian GDP numbers later in the day, as well as weekly jobless claims in the US and the Chicago PMI. That's it from me. Thank you very much for watching, and have a great day.